Welcome to Getting Rich with Rich. I'm Rich, founder of Under the Radar Report. This week I'm going to talk quickly about our hydrogen report and some of the stocks we cover, as well as what you need to look for in a stock, where I'll mention some hot stocks out there. That's right, Telix Pharma, DroneShield. Let's get it on. It's getting hot. Well, speaking of heat, why our hydrogen report is good is because this is the only place where you remove the hype and look at the industry fundamentals. That's right, nowhere else can you do this, only at Under the Radar. So basically, we're putting hydrogen into a digestible form. So don't worry, you won't blow up. That is the point of the report. So we've put a lot of effort into it, and it's clear that because hydrogen can't be simply mined, like it needs to be processed, like there's not a lot of clarity in the market. So people get overly optimistic and overly pessimistic, and that leads to opportunities. So there's not even a clear market price for it. So like you can come up with a lot of misinformed ideas out of this. So we clarify it all, simplify it, we make it simple. So we cover off on stocks in the sector: Hazer, Spark Technologies, Pure Hydrogen, Province Resources. And then there's our favorite, I'm looking at you, Twiggy, Fortescue Metals. So this brings me to my next point, which is that investing does cut through a lot of stuff. Like the world's crazy, but in investing, it is actually pretty simple. Essentially, we're looking for value. So this can admittedly exist in many different forms, but we're just trying to find something cheap and sell it at a higher price. The form we focus on in the markets and at Under the Radar report is earnings. So we're essentially looking for stocks that are profitable or at least have a line of sight towards profitability. This is all important now that interest rates at kind of normalized levels of 4+%. So this involves analysis of the big three. I'm talking the P&L, the balance sheet, the cash flow statement. Yes, I'm talking about fundamentals. So then we come to valuation. There are two factors involved in valuation: sentiment and fundamentals. You can only know the role that sentiment plays when you have a good handle on a stock's fundamentals. So this week I interviewed Andy Gracie from Australian Ethical, which we're going to be releasing soon. He's had a lot of experience, at the speculative end of the market, because he looks at medical technology stocks. So he's got a lot of experience there. And what he said, I completely agree with. When a stock moves at a rate of knots, you don't chase. So we were talking about Telix Pharmaceuticals, TLX. So this has a nuclear-based medicine treatment for prostate cancer. Well, nuclear medicine has been around for a long time, and Telix's product is impressive. But I've been researching biotechs also for a long time, and I talk to a lot of pathologists. And let me tell you, their product, while it's innovative, is not game-changing. Certainly, I think the market's getting ahead of itself with a $6 billion valuation. But, that's not to say that there is value. But as an investor, you have to be aware of when the stock, the valuation that people are paying is over and above what is being dictated by the value you're going to get as a shareholder. So Andy's fund owns another radiopharma stock. That's what the new word that they call for radiopharmaceuticals, what they call the nuclear medicine. He owns Clarity Pharmaceuticals. So this copper-based cancer treatment is signposted with its ASX code CU6. So we cover off on this stock in our subscriber picks. So basically, members email us stocks and we cover them. So that's what we like doing. Generates lots of ideas, generates a good community. That's what we're about. But then we get to DroneShield, which quite a few people have been asking us about, which also has a great product. But it's clear that the stock has gotten away from me, which is fine, but I admit that it doesn't make me happy. But then I see DroneShield issuing stock at 80 cents when it's trading at $1.30 or $1.40. So they did this a couple of days ago and locking in a $20 million profit. So you have to question these things when you're a minority investor. Like, it just doesn't make sense. for shareholders, and it doesn't give you confidence. And that's what you really want to see. You want to see good faith being shown by management, by boards. And when you don't see that, I wouldn't touch it with a barge pole. So the point is that if you're not looking at fundamentals, you're pretty much in a pyramid scheme. Most people get burned that way, and our job is to avoid fires. So what I'm also excited about this week is that we're releasing our Magnificent 7 income portfolios. This is the real Magnificent 7, and it comes from our blue chip report. These are 7 stocks you can own to build your portfolio and give you the opportunity to go for growth with small caps, which is what we love. Well, I've had a really good time getting rich with Rich once again, and I'll look forward to talking to you next week.